Hello traders, I wanted to make a quick video here to address a post that our good friend ADAI123, he's been having some issues. He hasn't been very descriptive as to what his challenges are. I asked him to post a picture and that we would help him. So I decided to make this little video as a better tool not only for him but for all of us to understand a couple of elements here that some of you may be struggling with. Okay, we know that he's trading the euro dollar on a 15-minute chart. If he's trading intraday, this is the wrong time interval for him to trade. Okay, if you're looking to trade intraday order flow or intraday swings, and you're going to be in these trades throughout the course of the day, not holding anything overnight or for a few days, then you want to be on the 5-minute chart, 10-minute chart tops. Okay, taking entrances on a 15-minute chart intraday wise is really cuts into your risk reward profile for your trade. So you want to make sure that you're trading a smaller time frame, or at the very least, if you need to look at the 15-minute to not get lost in the order flow, which I also understand, then you may want to, once price gets into your area of interest, drop down to a pardon me, trading time frame so that you can have a better price entry in your area of interest. Okay, it's important for you guys to follow that. Okay, now I don't understand this AGC. I'm thinking maybe it's an ABC or something along those lines, plus an AB equals CD test only. So I guess from what I'm seeing here is that he sees that there's an ABCD completion into this area, and then he has a, I don't understand what this means, whether the ABC failed because it went down too far or what have you. Not exactly sure, but I want to take this, I want to break it down, and I want to also ask that when you all post charts like this for us to help, that you give us some sort of a description or some sort of a question or some sort of something that helps us help you. It's very difficult for us to look at something like this and wonder what it is that you're really asking. We can assume when we make assumptions, and our assumptions may be partially correct, but they may not totally address the issue, and it may cause inefficiencies. I like our thread to be efficient and productive, and not have to have 8 or 9 or 10 posts, as they are very time consuming to put a thought process into writing, and and then bring the point across in an efficient manner. Okay, pardon me. So let's break this down. Okay, so one of the things that I see off the bat here is that you chose this swing and this swing to draw a ratio like this. So I want to ask you why you particularly chose this one. I understand why you chose this one. It is the low, but I want to understand a little better as to why you chose this one. And I'm gonna, when I bring in my chart to draw this out for you, I'm gonna show you what the importance is in choosing the right points. I understand that there is a clear high here and a clear low. There's also a clear line and a clear low here. I would have understood you taking this one and this one, although it doesn't help you with this. If you're extending things down, you want to make sure that you're working off of a clear one. In this particular picture, there is some more price action here that I believe you should have incorporated into the proper clear high and clear low. In this particular case here, we had a one-to-one completion to the upside, and if you were trading this completion or looking for a complex correction of a bigger move into an expectation to the downside, this is how we start building our case for entry, understanding where we're looking and what areas we're targeting to position ourselves into trades, depending on what the expectation is and where the market is going in general. So I'm going to bring in my chart now. I'm going to move this one out of the way. Okay, I'm going to erase this line here. And this is exactly the euro dollar futures, which is the same chart basically as the let me bring this a little, let me bring it in here so y'all can see that um, this right here is this right here, and this right here is this. The candles are identical, only mine are scrunched down. His are a little more like that. Um, but I wanted you all to see how this stuff right here is this area right here, and then this right here is this right here. It's identical. Okay, so when you drew this fib from here to here, that's from here to here. As you can see, this swing is it is a main swing, but that main swing goes from here to here, and then it corrects again and it goes down. The clear high and low of the overall in this particular situation, if you're looking at this as a whole swing, which I'm not saying it's not acceptable, it's fine, but your Fibonacci ratio should have been drawn from here, okay, as this is a clear high than this one. We do have something here. Now here, it's all the way up there. Clearly, that's a whole different other longer term or some sort of other main swing. But if you wanted to use this as a main high and main low, it would have been more appropriate to identify this and this to draw your ratio from. Okay, so I'm going to pull this out here, and I'll bring it back in and out. So when you're looking at this as a whole clear swing and you're looking as a correction, now this becomes longer term order flow as a main swing. Okay, it took a whole day basically to achieve this whole process down. So, and when you look at a more shorter term order flow, you're looking at these other swings right here, this other set of swings here. Okay, so this is shorter term or a more realistic trading um, viable trading opportunity from a shorter term, whether you're a swing trader or whether you are a intraday trader. We always trade swing. So I mean, I know that the concept of swing trading is for people that are trading the 1 hour chart and they're holding on to these trades from a few days to maybe a week or a couple of weeks. They consider themselves swing traders, but I don't care if you're on a 5 minute chart, on a 1 minute chart, they're all swings, and we are swing traders. We're not swing traders if we're scalpers. Okay, if we're scalping the market for a few points here and there, which I don't do, then you're not a swing. You're not a swing trader. Okay, so we can consider ourselves intraday swing traders, and if you're going to do that, and if that's the kind of trading you want to do, I recommend that you drop down or at least use a smaller time frame to get a better price entry. Because waiting for a 15-minute candle to complete in an area of interest is the difference between making a decision to enter here or possibly making a decision to enter here on a smaller time frame. You get a better risk reward overall. Okay, and then you have more room of tolerance because now your stop is smaller, or if it's not smaller, it's further away. It gives you better options. It gives you more room to um, participate in this market. So, having said that, okay, and we're looking here, you identified this swing right here, okay, as your first correction, and then the market tried to push down, it couldn't, okay, so, and then you move this up and you said that the market produced a ABC to the upside, and that is correct. It most certainly did. Okay, so two things that you need to keep in mind from an intraday perspective, okay, or from a shorter term perspective. This market has broken structure to the upside. Okay, now in the grand scheme of things, nothing has changed. Okay, and I'm going to tell you why that is in a second, and it may help some of the other traders here. Okay, but right now, from a short-term order flow or from a more intraday or shorter or immediate order flow, I want to use those different words because I want you to define what kind of trader you want to be, what kind of order flow you're looking to capitalize on. Okay, it makes no sense for you to be an intraday trader and try to capitalize and move off of this whole thing. That's not an, although this move happened intraday, okay, the corrective process of this could last a day, day and a half to a couple of days, not only because of the range, but because of the time frame that you are looking at. Okay, so we broke this short term or more immediate or intraday order flow here. Okay, and we have to understand that the market is speaking to us and it's telling us that what right now it wants to continue going higher off of this order flow. So the expectation is a higher low and a new structure high from this. Okay, so once the market achieves that here, okay, we have now projection to the upside. Momentum is weak. Okay, it took a couple of swings to achieve that, the second swing being a lot weaker than the first one, and that will give me a good um, a good trading opportunity to the downside off of the completion of this one-to-one. Because since you're looking at this, I know you used this swing right here as the one to identify. Okay, the more appropriate one is actually this one. This is the clearest high off of this move down. Okay, so now we're looking at a more appropriate Fibonacci ratio, a complex correction of a bigger move. Okay, and right now we have a couple of things. Okay, we have a couple of things that would help us determine whether we want to participate in a trade to the downside off of the completion of this one-to-one. One, how deep am I coming into this overall swing? Is the market strongly bearish? Okay, because you're looking to take a trade on a break of a more immediate or short-term order flow to the upside. Okay, and you need to determine, is this market overall strong enough to produce an expectation of a new structure low in the long term, or is this market going to dance around, okay, to the upside, correct deeper, maybe even change the order flow altogether? There's a couple of things that you want to identify ahead of time to do this, okay, or to take this kind of trade. One is you have the first leg, so you can anticipate what kind of a correction we got. The first correction was very deep, okay, overall, something that you wouldn't have expected to see when you have this much volume and strength driving the market. You're still making good projections, although this one was a little weaker, but you still have great volume. Okay, you do have some buying coming into the market here, but overall you have really strong selling. Okay, so you wouldn't have expected, okay, a deep or powerful correction. You got a deeper than expected correction here. Okay, and I'm going to erase this for the time being because I want you all to see this. It's important. Okay, we had a correction that was very deep to the 78.6 off of a lot of strength. That tells you what? Okay, we got a deep correction where we shouldn't have gotten one, so we could see a possible complex correction, maybe a retest of the bottom, maybe some push down to the bottom, but I can't rule out the possibility that we're going to get a corrective process here and that we may not get that new structure low, even though that is the expectation. These are visual clues that the market is telling us. We got something here that was stronger than we expected on the correction, which means what? There's a little bit of weakness coming into the market from the selling side. Things may slow down for the sellers. May, not necessarily will. But you have to consider these options and these possibilities when you're trying to build a case for either an entry or to accept or dismiss a possible trading opportunity. Okay, so you had a great rotation, very strong. It didn't continue. Okay, that's fine. Okay, so if you got short here, okay, you know your stop needs to be above this area. Okay, now you need to consider, okay, what's going on here. Okay, this market should have had continuation to the downside, has not been able to make a short-term or immediate new structure low on this order flow. The bears are what? Seriously in trouble. So now you have a clear swing. Now you know you're possibly going to correct what? Deeper. You have to look at what your overall main swing is on the longer term because you're looking for a complex correction of that. So you did the right thing here, is drawing a extension of this and say, okay, where is this market likely to correct from a complex corrective standpoint to this bigger move? And that is somewhere over here. So if your stop is below this at this point, I know your initial stop was here. Now you have decisions to make. Is this going to turn into a rescue situation? Okay. Or do I need to relook at this from a longer term situation? Is it salvageable? Can I salvage this trade? Okay. Now in this particular case, if you're trading this order flow and this happens, I'd rather just be out of the trade once price makes a new structure high against me, since I do not trade the longer term in mind. You can take a trade with the longer term picture in mind, and those are the most profitable trades and better opportunity trades, but you have to consider your options. Okay, in this particular case, I would have just taken the loss if I was short here, and next trade. It's not a big deal. Okay, so at this particular situation, now you have a complex situation of a swing to the upside, completing an ABCD. Okay, is this worth trading to the downside? One, you come from a very strong market to the downside. Although the bears took a dump here and crapped out and did not continue on, were not able to make a new structure low, and this area here held. Okay, so now, but how did this second leg to the upside look when you compare the momentum here? This is the lowest point. Okay, one of these two. This is the one that happened first. The second one was a retest. So use the first one. And how did the momentum look on the second one, where it completed? There's a lot less pitch, right? A lot more candles. There's significant weakness here on the buyers coming up. Okay, you're looking at this from a more complex, longer term situation. Okay, now you're identifying a clear high and a clear low. You see the market is heading into the golden zone, or golden ratio 618 of this overall bigger situation, ABCD completion. You're looking to take a trade to the downside here. Okay, now a couple of options. Okay, there are two situations here happening. Okay, one, you're looking for a possible rejoining of this type of situation, that the market will eventually at some point get down here. Okay, but that should not be your expectation. Okay, entering here looking to get out there, unless you're trading this longer term situation, at which point you will have to be tolerant and hold on to this for as long as it takes, 2 or 3 days. Remember, you're on a 15-minute chart. You're looking at a bigger set, at a longer term order flow. So you have to consider that if you're looking to enter here and capitalize on this, this may not happen for a few days. Okay, and you have to be conscious of that and be willing to hold on to that trade as long as it takes, as long as you follow your rules on trade management, to either you reach target, get out at get taken out for a break even, or just flat out get stopped out for a loss. Okay, it doesn't matter. Okay, but you have to be trading the proper order flow. You have to be trading. You have to take the right trade that fits your trade plan and your chosen order flow. Okay, if you're an intraday trader, if you're a short-term trader, this cannot be the trade that you're looking to take profit down here. You're trading this ABCD completion into an area of a longer term ratio that has confluence with what? Structure, where the second leg was weaker and symmetrical to the first leg. This is a very good trading opportunity to the downside. Okay, where your profit target is the 618 of the pattern, because you're trading the pattern, the harmonic pattern of the ABCD. Okay, so now that we've identified that and we know that this pattern completed up here, your entry, okay, depending on what signal you use to enter this trade, okay, would have been somewhere at the completion point, whatever your entry criteria is, and your entry is wherever it was here. Your stop is about 10 to 15 points, or at the very least above structure to the left. In this particular case is here. Your stop has to be above this area here. Pardon me. Okay, and now your break-even point is the 38%. Okay, and your take profit is the 61.8. Okay, so entry somewhere over here. Okay, break even here. This might have taken you out for a break even. I don't know, depending on where your entry was. Okay, but profit target ultimately was achieved. Okay, so looking at this, and I don't know, let me see how you decided to look at this. So it looks like, no crap, sorry. So it looks like you went from here to here. Okay, so you went from here to here, and then you did this, and then you put an X down here. Okay, now when you're looking at this, okay, completion pattern, that pattern, okay, is going to trade deeper, usually testing what? The completion point, the 618, usually ends up being somewhere near the correction. So you're almost always going to get some sort of 100% correction of the C to D leg, somewhere in that area, sometimes making a short-term new structure low, okay, depending on how things extend, okay? But the market had already spoken in the intraday or shorter term, making a new structure high, okay? So it would have been, the correct thing to do here from a short-term basis is to get in here, get out near at the 618 at the profit target, and look for opportunities to either get long, since the market has already spoken that it wants to head higher, or stay on the sidelines to see if the market produces a lower high into an area of structure here, and then gives you an opportunity to enter again into what? The continuation of the longer term. Those are things that you need to weigh. At the very least, you need to be out here. You need to take profit because you're trading this pattern, okay, in an area where the market has spoken and said, right now I can't continue lower despite all the strength. I want to go higher. That is my what I want to do. That is the short-term expectation. Okay, so you may be looking at a three drives pattern to the upside. You may be looking at a retest of this area, something in between, something more complex. Who knows? Who cares? But you have to understand what the market is working towards. Okay, so that you can take the appropriate trade. Okay, and that has the highest degree of probabilities of working out. Your profit targets need to be clear. Your interests need to be clear. Your expectations need to be clear. And more importantly, if you're trading the wrong order flow, okay, or you're taking a trade off of one order flow with the expectation of another, you're really hurting yourself and your trade, okay? And you're just going to be confused. You're going to go through a lot of pain. You're going to start getting that tunnel vision. You're going to get loss disoriented, and you're going to pay the ultimate price with losing money, okay? So now, what's going on here in this market? Well, we see that the sellers came in with what? A lot of volume. But what did the buyers do? The buyers fought them every step of the way with these smaller short-term swings. And then the market eventually came to the golden ratio, or came to the profit target expectation of this pattern, and now pushed up with a lot of volume to retest this area. Okay, so the sellers are trying to hold on to this area, okay, and the buyers are trying to get past this area. What's likely to happen? What is the expectation? The expectation is for a short-term new structure high. Is that likely to happen? Well, it's very possible. Although the market did not achieve it here, should the bears had they wanted to take back this market and for some reason allowed this to happen, should they have been more diligent or forceful to stop the bulls here? Yes. Should the bulls have been allowed to retest the highs? No. Should the bears have come in here with a more sense of strength and purpose? Yes. Look at all these candles weakening into this smaller area of shorter term support and resistance, right? This should not be happening right now. Although the bulls do not look very impressive here, it just may be temporary. Okay, we may get a complex correction to the downside to retest this area down here before the bulls come in again. Okay, the point is that if you're short anywhere in this area, you want to be very careful and very aware of this area right here. Why? Because the market bought off of that area. The market bought off of that area, and very recently bought off of this area. What? With a lot of determination, coming back from a lot of strength trying to come again. So it took a lot, and a lot of people or a lot of money decided to get into the market in this particular area, producing this. Okay, big red flag if you're short. Okay, that's not to say this market cannot find a resistance here or a little bit higher, still keep the integrity of this longer term situation intact and make that new structure low. But there is definitely weakness to the downside. There is increased volume and interest to the upside, and you have to be aware of that as there is strength building to the upside. And if you want to trade in the direction of strength and away from weakness, if your market has you short for whatever reason, you want to be very aware of where the buyers are coming in and how strong they're coming in, because that's where you need to protect your trade. That's exactly where you need to either protect your trade by either reducing your risk, locking in profit, or getting out of the trade altogether. Okay? I hope that had value to you. I hope that that makes sense. The last thing I wanted to do is you have to understand that in this particular situation, you have this area right here. Okay? Maybe fatter than you want it to be, but you're talking about a 15-minute time frame. You know, this is the area where what? Support. This whole area is what? Demand. Okay? So the market is going to come to that area. The market teaches us. One thing that the market teaches is that usually price comes to and from areas of decision making. Decision making. Decision making. Okay? Market came down. There was a lot of strength, so probably they didn't have a chance to do that. Okay? But when the market slows down a little, weakens a little, what happens? Decision making. Here it went through, came back. What did it do? Decisions were made in this area. What did price do? Try to make a decision. What happened here? It made another decision and went up, came higher. Okay, broke up, came back, right here. Where did it come back to? Decision making. Went up. Where did it go to? Decision making. Decision making. Decision making. Okay, so it's important for you to understand these levels. Okay, and understand what the market is trying to respect as a whole. Okay, and how is it respecting it? Is it respecting it with strength? Yes. Is it respecting it with strength? No. Is it likely to fail on the way up? Well, there's a lack of interest here in selling against this. Okay, I wouldn't sell against this either. Okay, smart money didn't do this. Okay, isn't looking to get short here. Okay, smart money sees the break of structure. Smart money sees the inability to continue down, the volume and interest going up, the selling pressure here that turned into huge buying pressure with the rejection, close 100% at its highest point. The smart money is going to wait for people to take profit here, let the market dip a little, understand the strength, the strength, the weakness of coming down, and looking for opportunities to get long. Okay, but because they have large accounts, they can't just throw all their money here. So they're going to start buying into areas here and be more determined to buy here or maybe even slightly lower. Okay, letting the market believe that it's going to push lower. Okay, but in fact, we already see the writing on the wall. Market should not be in this area after this much room to the downside. This market is transitioning into a possible bullish situation. There may not be long term. May not be long term, as we know that the clear high here. So for this market to change directions long term, it would have to at the very least break above this level here. Okay, so this was a short video. I hope it had value. It was important for me to make this video because it would have been easier for me, less time consuming for me to try to type all this out, and it would hopefully help our friend out and those of you that sometimes get caught up in situations like this and wonder, what are you trading, what should be trading, what happened, and all that good stuff. Okay, you also have another situation happen here for those of you that are more into harmonic patterns, where you do have the 618, you do have the correction of the 618. So what do you have here in the works? That's right, a possible Garley pattern. Okay, that completes somewhere in this general area. Okay, the reversal or the price reversal zone to the Garley pattern is Control F12. So this is the possible reversal area to the pattern, and this is what the pattern looks like. For those of you that are a little, I can't see it. Now these patterns don't have to be symmetrical, but the more symmetrical they are, the more I like them. Okay, so whether this completes here or here or here or there, it doesn't matter how long it takes to get there. If price gets there, you have a potential Garley pattern and a very nice opportunity, since we're looking at a what appears to be a bearish market, a strong bearish market. This will be the continuation. Okay, because these patterns happen what in area of consolidations. Okay, usually within flag patterns of an overall complex corrective process of something bigger. Okay, so understanding that this pattern is a viable probability, the short-term order flow is leaning towards the market pushing higher. This is a very good and possible trading opportunity to keep an eye on for the future. This may complete overnight, it may complete in a couple of days, and hopefully not in a couple of weeks, but it should complete relatively soon considering the volume of the market. And I would look towards Monday, Tuesday, latest Wednesday to see if this is a probability to trade to the downside. Okay, it's a bearish market that's in a complex corrective process. That's what most people will consider a flag, a weak overall just consolidation area, and usually a flag pattern indicates what? A continuation of the underlying trend, which in here is bearish. So this pattern is in the right place, um, is looking to continue the overall trend. So this is a very good possible trading opportunity here, Monday, Tuesday, or Wednesday. Okay, um, that's all I got. I wanted to keep it short, 32 minutes, short and sweet, and I hope it addresses the issue that our good friend is having. I want to also ask everyone that when you post charts, to make sure that we can see what instrument it is, what time interval it is, and that you don't just throw a chart up. Ask your question. Okay, help us help you. I believe in efficiency. I want to keep things efficient. I don't want it to be doing 15 or 20 posts to answer one question. I am busy, and most of us are. And around the holidays, we like to spend time with our families. So please um, be conscious of that. And we have all the intentions to help you. We are committed to helping you. Everyone is very nice, but you need to do your part as well. Thank you very much, and good trading.